SPY or VTI if you could only pick one in 2025? Which ETF builds more wealth? Welcome to Asset Index, where we help you navigate wealth with data, not hype. Today we are comparing two of the most popular index funds in the world: SPY, which tracks the Standard & Poor's 500, VTI, which tracks the total United States stock market. Part 1. What are these ETFs? SPY tracks the top 500 companies in the United States. That includes giants like Apple, Microsoft, Amazon, and Google. It is heavily weighted toward tech, and large-cap stocks dominate. VTI tracks the entire U.S. market, over 4,000 companies. That includes large, mid, and small-cap stocks. It gives you broader exposure to the economy as a whole. Part 2. Performance comparison. Historically, SPY has slightly outperformed VTI in bull markets. Why? Because it is focused on large-cap tech, the biggest drivers of returns lately, but during market downturns, VTI often holds up better, thanks to its broader base and exposure to value stocks and small caps. Over the last 10 years, SPY delivered around 12 to 13% annual return. VTI delivered around 11 to 12%. The difference is not huge, but it is real. Part 3. Cost and fees. Both SPY and VTI have very low expense ratios. SPY costs 0.09%, VTI costs 0.03%. So on a $10,000 investment would pay $9 per year with SPY and only $3 per year with VTI. Not a deal breaker either way, but VTI wins on fee. Part 4. Tax efficiency. VTI is more tax efficient for long-term investors. Why? Because it uses a total market structure through Vanguard's unique fund design. In simple terms, VTI tends to generate fewer capital gains, which means fewer surprise tax bills. Part 5. Which one should you pick if you want simplicity? Strong large cap exposure, slightly higher upside during bull markets. Then go with SPY. If you want broader diversification, lower fees, higher tax efficiency, and total market exposure for the long term, then go with VTI. Final thoughts. There is no wrong choice. They are both excellent ETFs. In fact, many investors choose to own both. But if you are building a long-term portfolio in 2025 and you want maximum exposure with minimal maintenance, VTI gives you the entire market in one fund. Subscribe to Asset Index for more ETF comparisons, long-term investing tips, and weekly market insights. Coming up next, why I am buying SCHD in 2025.